2, 1. We're live. Welcome back to the Fireside chat on 86.5. The Vibe.
The Vibe.
We're back with Market Matt.
What's up, everybody? How you doing, buddy?
Doing well.
That's awesome. Shady V, how are you doing?
I'm doing all right. How about you, Jackie C?
I'm doing great myself. A wild week. So we decided that we would spend today as just a special talking about the markets and everything that happened this week. So Matt, you're our market specialist. We did a little bit of talking about it yesterday.
Yeah.
But we focused on it more from, a political standpoint, kind of from a history standpoint, the little guy rising up against the ruling class and that being, a constant, theme throughout history. And I guess, we're here for your explanation. First, can we ask you, because, you have insider knowledge about the market. Could you explain to everybody what happened in your eyes?
Yeah. So it was a short squeeze. So just real quickly, I think I explained it before, but real quickly, I'll explain what short selling is. It's the opposite of, say you buy a stock for $100 to invest. You expect the price to go up. You want the price to go up because every amount that goes up from that $100 is profit to you, right? So it's pretty much the opposite of that. There'll be anyone can do it. A retail investor like us, or these large brokerage firms, or they can sell short, which means instead of buying the stock at $100 for the price to go up, you sell the shares at $100. So in hopes that the price of the stock will go down. So pretty much if you short something at $100 and the price goes down to 20, you make $80 per every share you shorted once you cover. So covering would be you buy the shares back at a lower price. So it's just literally the opposite of buying a stock and then hoping it goes up. There's certain percentages. There's a certain amount of shares for every stock or every company that is it's called the float. So you can actually look up short percentage. So usually when there's a stock that has a high short percentage, that means that the sentiment or whatever the
public opinion.
Yeah, the public opinion or whoever's holding thinks that the stock is going to go down. So that's what happened with GameStop, AMC, like all these other companies that went really crazy. So, which pretty much was illegal. They pretty much borrowed or shorted shares more than the entire float. I think it was 100. How many percent short was it for GameStop? I think you just said it was like 160% or something outrageous.
Yeah.
It should be illegal for a company to short shares that aren't even available to borrow. So that's pretty much the gist of what happened with it. So
can we rewind back a little bit and can you explain like how Wall Street bets versus the hedge funds, how that whole thing went down?
Wall Street bets.
Like you explained the shorts and they don't know who they is, if that makes sense.
Wall Street Bets, the group or whatever, they have a large amount of followers. So I guess posting on there over a regular basis, and then knowing that the GameStop short percentage was so high, they pretty much told everyone and guided everyone to just buy as many shares as they can to make that the short sellers cover. So pretty much it turned into a buying frenzy. So they kept buying and buying and buying, so the price kept going up, up, up. And these short sellers were not expecting that. They were expecting GameStop to go bankrupt. They haven't had positive revenue since 2017. That's why the short percentage was so high. That's why all these large firms were putting in money to short sell, because they didn't think it was going to go up at all. It was an artificial inflation of the price because of all the buyers that were moving in. It was very high volume. Volume is what moves stocks. So it makes the move. So just the high amount of volume, high buys, no sells drove the price up. And also the shorts that were, that shorted the shares aren't going to buy back or cover because they were at such a large loss already when the price went up. So I actually think that a lot of the shorts haven't even covered yet. They're waiting for it to drop. And if they don't cover, it may not come down anytime soon. However, my personal opinion, I do think that GameStop will come down back to earth eventually. So if anyone is holding right now at a higher price, just make sure you're safe and you keep your investment safe. So
make sure you're constantly monitoring the situation.
That's
As somebody who used to work there, I will agree with Matt that that share price cannot stay that high.
It won't. It will come back down eventually.
It just can't. Maybe it can go a little bit higher first if people keep buying.
It might,
but it won't stay 300 something.
You know, I'm shocked to have seen it go this high. I don't think I've ever seen anything have such an insane short squeeze. Yeah, and the other thing was that I know Robinhood, Webull, a couple other brokerage companies were trying to limit people's rights to buy these certain securities or stocks, and I don't think that's right for them to be able to do that. How is it fair for these billion-dollar hedge fund and finance companies and firms to be able to do the opposite, and now they're trying to limit retail from buying a stock just because it has a high short percentage or whatever. I just want to bring that up because I was a little angry to see that. I personally trade with TD Ameritrade, and I use the platform Thinkorswim. As far as I know, the only limitations they put in place were for I think it was covered puts and covered calls for options contracts. So instead of it being able to trade on margin or on credit, you have to have the equity or the cash to cover those contracts. That was the only limitation they put, which was not bad. You still could have bought the shares as much as you wanted. You could even short it if you wanted. Yeah, so that's what I personally use to trade. I think Robinhood's going to have a big. I know there's already a couple lawsuits being taken out on them and a couple other companies. We're supposed to be a free market society, you know. Why are you limiting retail and regular investors from buying certain stocks? You know, it's just a big corruption. Sorry, I didn't mean to go off on a tangent there.
No. I was just thinking to myself. Yeah. You asked a question, I have an answer because the sheriff of Nottingham called. That's why Robinhood changed it up. And but no, let me ask you this. Right now, AOC and Ted Cruz and several other congressmen have talked about there's going to be a hearing now in the House.
Yeah, they may come up with a law or something.
Yeah, they're gonna. Well, that's what I was going to ask. Is what kind of laws would you? Because I'm not a finance guy.
Yeah.
What kind of laws would you want to see put in place to kind of regulate this thing?
I mean, the only thing I could think of was the corruption with being able to short a stock, the short volume or the short percentage being more than the entire float of the shares that are out there. Like that shouldn't be allowed. That's the one thing that I see being an issue. How are you gonna buy or sell something that doesn't exist? It just doesn't make sense. And I didn't even know that was possible, to be honest. I don't think I've ever seen a short percentage over the amount of shares that are out there. That's crazy. So I think that should definitely be a law. Or a regulation at least put in place for these large hedge funds, even for retail like us. Like obviously, I mean, we don't have millions of dollars yet to be able to short sell stocks like that. But yeah, that should definitely be a regulation put in place. That's the only thing I could think of.
Okay. Yeah. What about how would you expect them, or how would you want to see them deal with Robinhood and some of these other brokerages?
You know, I think what TD did. I mean, they did put some limitations. I think. You know, having it, they did it. I know they did it for TD. Like they did it to protect the retail investor. Like they don't want you to lose money. They don't want you to have a margin call just because you know they gave you some credit to buy or sell an options contract or whatever. Like I think you probably should have the money in case you do have to pay it back instead of your account just going negative $20,000, $30,000, $40,000, whatever it's going to be. Yeah.
Okay.
Yeah.
So, let me ask you this.
Yeah.
You said that you think that what Robinhood did was morally wrong, but is there anything legally wrong with it?
I think it is. Yeah. I mean, they prevented people from even buying the stock altogether. It had nothing to do with options or anything. Like you couldn't even buy the shares. You could only sell or just keep holding it. Like that's like a lose-lose situation. Like they're just helping the short sellers by that point, because if there's no more buys being allowed to come in from that specific platform, that's taking away volume that would have been there to begin with, and that would have drove the price up higher. And also, I had a friend that had options in AMC. So when Robinhood announced that they weren't letting anyone buy the security anymore, the price tanked, and he ended up losing money just because of that artificial drop because of their announcement not being allowed to buy those specific stocks. So I think that is also a lawsuit. Like people lost money from artificial news from that. So that makes sense. I mean, people could probably sue because of that. Because the prices that when the prices went down when they announced that would have never happened if they just let people buy, which there should have been no limitations to begin with. You see what I'm saying?
Yeah.
Yeah.
No, I'm certainly with you. I think that for me anyway, from a political standpoint, I had somebody say they haven't seen Democrats and Republicans this together since 9/11.
Yeah.
And I was like, that is true. This country, like right now, like it seems like everybody in America is angry, but the folks on Wall Street.
Yeah. This is history in the making. I mean, so many things are going on in our society, in our world right now. It's just one thing after another, craziness happening. This, I don't think has ever, to this extent, I don't think it's ever happened. So we are living in history right now. It's going to be an interesting rest of the year, but hopefully it's a good one. So.
Yep, certainly. This is big history. I don't know if this will be included in a textbook for a K through 12, but I think, you go to college, you study some history.
Definitely college, yeah.
I was going to say, I think like American history, I think this will make it, That being said, let me ask you one more question about it, really.
Sure.
What do you think the long-term impact on the market is from this? If everybody is putting their money into game, I heard that somebody said, obviously there's always an other side to the argument.
Yeah.
And they argued that Robinhood and all these brokerages were one, protecting the consumer from themselves,
I
getting
agree
in there and
partly,
losing money.
Yeah.
But then they also argued that they were protecting Main Street because this type of action isn't healthy for the economy or for the stock market as a whole.
It's not. It is.
And so can you talk about that a little bit?
That's what I was saying. It's a lose-lose. I think personally, Robinhood preventing people from buying the stock altogether was a bad move. I think they should have allowed that still. I think what TD and the other brokers did, limiting, for certain options and stuff like that, or if you want a short sale, like you have to have the equity or the money to cover it if you want to open that position, so that the brokerage, doesn't have to chase you down for the money. You don't have to have a margin call, and that, someone, whenever there's a transaction like that, someone has to cough up the money and get paid for it. So I think Robinhood should have handled it differently by implementing what I just said, making sure that the investor has the money to cover whatever position that they have. No margin, no credit given like that. As far as history, I mean, I think that a lot of people that don't know about investing and are new to it are going to think that, oh, if I just put money in this and follow the trend, I'm going to make money. And I think a lot of people did that with GameStop. They're like, oh my God, it's up so high, it might go up higher, and they're putting money in and it may go up more, but they're not knowledgeable enough to know when a price is going to go down, or no one can even predict the price action with GameStop right now. So it's like, I think a lot of people are going to be get a great awakening and then lose a lot of money from this. So I think that could be bad in general for the market. And you got a lot of new people that don't know what they're doing, which could artificially drive the price up like GameStop did. So it could be more volatile for different stocks. I know I follow a couple of YouTubers, and I was actually messaging a guy the other day, and he was just trying to find all the stocks that have a high short percentage to see, and that was like kind of a residual effect from GameStop, AMC. Personally, a stock that I was holding went parabolic. Like I made a bunch of money on it this week. That was CVM. Also was a restricted security from Robinhood actually, and also had a high short percentage. The CEO is kind of a little bit of a wacko. He was tweeting a bunch of stuff about short sellers and stuff the other day, and with all this stuff going on with GameStop and stuff, I think that's what drove the price up so much. I'm not complaining because I did profit from it quite a bit, but yeah, I just think that it's not good overall. I mean, the market shouldn't be this sporadic right now. And with COVID and the pandemic, there's a lot of analysts predicting another correction. It could be a 10, 15, 20% correction even, which is kind of a lot. I personally do think that's still coming, but yeah, everyone just needs to be careful and keep an eye out and make sure that they're protecting their money,
Can I ask you to elaborate on that? What is a correction? And then can I ask you, when do you believe that that's coming?
Yeah, like a correction, in just the overall economy, the overall stock market's going to be declining percentage-wise. When do I think it's going to happen? I mean, I don't think I definitely can't exactly predict it. From what I've read and from what I've, what I think that it's happening now, slowly. I think it could be between now, March, April. I think COVID cases and all that are going to be spiking again. I think they said late February, March is going to be the peak of this year. So we just have to wait out and see how that's going to happen. I mean, you saw last March when the market crashed, how quickly it came back. I mean, we're even more positive than we were before it crashed last year. So you just got to keep an eye out, make sure you protect yourself. I don't think it's going to be a huge market crash like before. I think it's going to be like a 10%, and then we'll slowly climb up from that for the rest of the year. I mean, we have Biden in now. He's in clean energy. I think cannabis will be federally legalized this year on a federal level, which is a huge deal. Yeah, cross your fingers if you like to do that. So there's a lot of things out there. I mean, EV vehicles are becoming a bigger thing. We're in a very high technology era right now, so I think things are going to be looking up in the long term.
A lot of options for folks to go for.
That's true.
Okay, well, let me ask you about some short-term options. Yeah. Before I ask you about your Fast Five, let me ask you about some Wall Street Bets, the Reddit group.
Yeah.
Let me ask you about their picks. And you can give me a thumbs up or a thumbs down.
Sure.
You can do a little bit of explation if you want.
Yeah.
You already thumbs down GameStop, correct?
Oh,
you said that you would not advise.
I'm not a fan of chasing. I've actually made money chasing stuff before, but I've also lost. So you just gotta be careful.
That's the game.
You could. I mean, what I would recommend if you're gonna trade GameStop, find a price you want to get in at. Look for the best time to buy stuff is after 10:15 in the morning. That's my personal thing. You want to wait till the market settles. The most volatile time in the market is between 9:30 and pretty much 10:30. So anywhere between 10:15, 10:30 after that time is a good time to gauge where the price is going to be to buy stuff. Sometimes selling is the best in that first hour of the market. Depends the situation. My advice for GameStop is if you're going to buy into it, buy shares, you set a stop loss on that. Like, you find a price you're willing to walk away with if it hits it, and then just go with it, because I think that's going to come down so quick that people aren't going to be able to see it. So they're not going to be able to see it coming.
Yeah.
So it could go down 80% in one day, just like it went up over 100% in a day. Like, you don't know. It's like, yeah.
Yeah, that's definitely true. What about AMC?
AMC, again, is the same situation with the short squeeze. I honestly think AMC is a good buy under $10 if you can ever catch the dip. I think it actually reached it under 10 this morning, just very briefly. I think under 10 would be a good buy. I think that as long as we have those vaccines pumping out in society, that things should get back to normal soon, and the sales for movies should go back up. I haven't been to the movies in a long time. I used to go with family, and my significant other all the time. And, I haven't been in a long time. I'd love to go again. And once I feel comfortable doing it, I'm sure other people will do the same. I'm sure sales will come in. I think AMC is actually okay because they also had an online streaming service for movies and stuff during COVID. And I think they did make some revenue from that. I know they just raised a bunch of money from the stock going up huge too. So they have cash on hand. So I think the company will survive. I think in the long term, it will go up. I think you need to wait to buy it.
Okay.
Yeah.
So that's AMC.
Yeah.
What about, I think they had BlackBerry.
BlackBerry
was one of theirs.
I think BlackBerry is a good long-term hold. I'm talking like 2 years or more, because they're not really in the phone business anymore. They're in 5G, and that's another sector I was talking about before. They're going to be working with other companies to make these 5G towers, antennas, and all that stuff, and to get them across not only the United States but other countries as well. I think good long term, if you can get it under $10 as well. Great. I think it's been fluctuating between like 10 and 20. With everything that's going on, I know that was a heavily shorted stock as well from before, so it did go up a little bit from that.
Yep, that was another one on their list.
Yeah.
They had Sundial.
Sundial.
Marijuana one.
Yeah, I'm not too familiar with that one. It's a penny stock. What is it? It's like 70 cents right now or something like that.
Yeah, it went up from
very
20
risky
cents to 70.
I mean, I've traded those before. It's very risky doing that. There's better cannabis companies out there. I mean, the stock price being so low right now, maybe there is potential for huge upside, but you just want to be careful. I'd have to do more due diligence myself on that before I really give a real analysis. I'm not sure if they're going to do a reverse split or anything like that, because that kills kind of shareholder value if they do that. I don't know. I think they just did an offering recently, so they may have cash. But yeah, I mean, I would just tread lightly on that one.
Yeah. Personally, I would say no, just based on your advice. Last week, Canopy Growth.
Yeah.
If y'all were in Canopy Growth, if you want to get in the marijuana sector, that shot up over the course of this week.
Great.
That was, as I said, that was an excellent call by you. So I would say, personally, I would say no to SNDL. I'm not the expert. The expert says the jury is still out, but
I'll have to do some research on that one this week.
I was going to say your prediction of Canopy Growth, certainly a fantastic one. And let me ask you about one more.
Sure.
Dogecoin. I know that's a
crypto. Yeah.
I know that's a crypto. I know it's not necessarily what you deal in, but
no, I don't really know too much about it. I think that with all the hype going on and everything right now, I wouldn't chase. But I mean, something that's at it's at 4, 5, 6 cents or whatever. If you want to throw some money in there and just kind of do a gamble or risk it, I mean, there's no like rhyme or reason to crypto right now, especially with the small coins like that. Just protect yourself. I mean, I wouldn't put in $30,000, $40,000 into it right now, but I think it could pump pretty hard. I mean, especially with Elon tweeting and stuff about it. Other people have. Wall Street Bets is now pumping it, so who knows? Maybe it'll go to $1. I mean, that's kind of crazy.
that would be insane.
I mean, if you threw in what is it at?
It's at like 4 or 5 cents.
Yeah, I mean, if you throw in some money, you may be able to make some money, but don't throw in what you're willing. Only throw in what you're willing to lose, pretty much, because crypto is another beast.
Crypto, yeah. They might go up, they might go down.
Well, the other thing the other thing with crypto is, the market doesn't ever close. It's open 24 hours a day. It's very volatile. So that's another thing you need to watch out for. Like someone I know, their brother trades crypto full time, and he's made millions off Bitcoin back when it made when it went up huge back in 2011 or whatever it was. And he trades full time, but it's a very stressful thing because he has to be on top of it always. And it's just that's. At least with the stock market, it closes. You can go to sleep and not have to worry about your entire portfolio tanking while you're sleeping. So,
No, for sure. I was up. I did a swing with Doge. Yesterday night, late at night. I got in at 3, got all out at 7, and then came back in at 4 cents. And now it's at 5. I was gonna say I wasn't. I was kind of pleased with myself.
Was that on Robinhood?
Yeah, I thought it was a professional move. I need to get off Robinhood.
That is professional.
I was gonna say, I need to get off Robinhood. I'm disgusted with their content. Yeah. I'm not gonna lie to you all. I'm normally one for hyping stuff up and talking crazy and talking out the side of my neck, but I feel like I'm not talking out the side of my neck when I say some big changes need to occur over at Robinhood.
Absolutely.
That was just what they did this week. It was a lot to witness. So it'll be interesting to see what they do going forward, especially with that committee hearing. That being said,
we'll have to wait and see. Yeah.
As I say, we don't want to take up too much more of your time. We could just ask you, if you have a few stocks for us that you're looking at that maybe we should get into.
I'll give you guys a couple real quick, just for these are ones that I'm watching for the next month.
The next month. Okay.
I may have mentioned them before. If we're headed for a correction, I would really recommend the ARK ETFs. That's ARK. There's I think there's like 6 or 7 different ones. You can look up on their websites, Arc Innovation, and see what holdings are in each one. I think those are going to be all-time highs by the end of the year. My 2 favorite are the Arc K and the Arc G. Focused on innovative technology and then also genome and like gene therapy type companies like CRISPR and different things like that. I mean, this is the future. They're definitely going to be going up. They have an amazing hedge fund manager, Kathy Wood. Do Google her name and just see what comes up. You'll be very impressed with that. And another stock for a good swing, I think, for like a month or 2 months, if you're playing options or shares, is SRPT. It was beaten down because they had like a COVID vaccine trial that ended up needing some more attention. So the price tanked over 60%. So I think it's sitting around $89 a share right now. It was over 170 just a couple of weeks ago or maybe a month ago. I personally am holding some options for April. I think I got $110 and $120 calls for that. I think it's going to be over well over 100 in the next few weeks to a month. Just keep an eye on that. ARC also has been loading up on them. So if you watch what other hedge fund managers do, kind of shadow trade a little bit and see what they're doing. Obviously, if big players are buying into a stock, that makes me more comfortable and more confident that the price is going to go up. Last one I'll mention is the ICLN, which was the clean energy ETF. I know you were talking about QCLN too. I think both are good options. If you're going to play options contracts for those, I would recommend getting Leaps, which would be for 2022. The premiums might be pretty high. However, I think those are going to be all-time highs again by the end of the year and through the Biden administration. You definitely can that's like a safe bet. Want to buy shares? I would try to get the ICLN under 20, 29 or 30. That would probably be a good entry. But yeah, those are just a couple recommendations I have for kind of long-term and short-term at the same time. So,
well, hey, Market Matt,
yes.
It's always a pleasure.
Absolutely.
This was a fantastic Finance Friday.
Yeah.
And an amazing edition of the Fireside Chat. It's all thanks to you.
Thank you.
Thanks you for coming, sir.
Absolutely.
And thank you all for listening. We look forward to seeing y'all next time.
Absolutely.
Only on the Fireside Chat. Or should I have said only on 86.5 The Vibe?
This is the Fireside Chat.
It's the Fireside Chat.
On 86.5 The Vibe.
There you go. That was good.